Should you buy now using down payment assistance or wait and save for your own down payment? I'm covering the pros and cons of using down payment assistance. Here we go. You want to buy your first home, but maybe you don't have 20% to put down or perfect credit. That's okay. If you're committed to a home purchase, then I'm here to help you do just that, maybe even sooner than you thought possible. My name is Scott Wynn, and I am a licensed mortgage advisor in Colorado with the Wynn and Egan team at Citywide Home Loans. If you want to buy a home in the next 12 months, then click that subscribe button, and together we'll make it happen. Down payment assistance. The pros, the cons, the good, the bad, the pluses, the minuses. All right, let's get started. So the first pro, money, of course, right? I mean, that is the whole point of using down payment assistance. Generally, you're going to need 5%, and if you're using FHA, 3.5%, or if you are under one of the exceptions that allow for conventional down to 3%, maybe a 3% down program, but you may not have that money, right? And that's exactly the point of down payment assistance. Down payment assistance covers the gap between the down payment that's required and the money that you have. And it sometimes can even help cover the closing costs that are required on the transaction as well. There is generally a minimum contribution requirement by you, sometimes as low as, let's say, $1,000. Sometimes it's a percentage of the purchase price, but ultimately it's going to be far less than what the minimum down payment requirement is on the loan, especially when you factor in closing costs. Our first con is income limits. See, 99% of the down payment assistance programs in Colorado are going to have some sort of income limitation, meaning you have to be at or below a certain income. Now, it's based generally off of area median income based on the county that you're purchasing in. And so it generally ranges between 80% and 120% of the area median income. So you're going to have to look at each program, but it is one of the cons associated with down payment assistance, especially if you make a lot of income but don't necessarily have a lot of money saved up for down payment. A plus for down payment assistance is that sometimes you don't even have to pay that money back. There are grant programs and sometimes forgivable seconds. So grants are what they sound like. They are a grant that gives you money and it just never has to be repaid. Forgivable seconds, however, are loans that get attached to your home. However, sometimes there's payments, generally not on a forgivable second, and what will happen is over time, it gradually gets forgiven. One example is one of the down payment assistance programs called MetroDPA. They offer a 36-month forgivable second, which means that after you've lived in the home for 36 months, that second mortgage completely gets eliminated. The good news is if for whatever reason you sold prior to the 36th month, it gets prorated and forgiven based on that time period. So for example, if you live there for 18 months, then 50% of that second would be forgiven. A minus when it comes to down payment assistance is potentially higher costs. If the down payment assistance is tied to the first mortgage, sometimes that first mortgage can carry either a higher interest rate or higher fees or both. So you're going to just want to do your research and understand whether or not that will impact you and how it impacts you. A good thing for down payment assistance is that it allows you to buy sooner. Maybe you are working on saving money for down payment and closing costs so you can make your first home purchase or your next home purchase. By utilizing a down payment assistance program, you eliminate that need or at least drastically reduce the amount of time that you need to save in order to make that possible. So what does that do for you? Well, interest rates are at historically all-time lows. And in addition to that, prices on homes are continuing to go up. So if you look at the affordability of a home right now, it's probably better now than it will be in 6 months or a year or 5 or 10 years down the road. So the sooner you can buy, the more affordable that home will be relative to where it will be in the future. In fact, it's been shown that homeowners have a net worth 36 times of that of a renter. And I think a large part of that is the equity that they're able to build in their home by getting into a fixed rate mortgage and be able to take advantage of the increasing home prices, building the equity in their home. A bad thing for down payment assistance is that some of them do require you to be a first-time homebuyer. Now, if you're a first-time homebuyer, this isn't necessarily a bad thing. However, if you're not, then this can be a problem. Even if you're not a first-time homebuyer, If you haven't owned a home in the most recent 3 years, then according to these programs, you are actually considered a first-time homebuyer and will qualify for any of the programs that require you to be a first-time homebuyer. Another pro for down payment assistance is that you can combine some of these down payment assistance programs with your traditional first mortgages in order to better your terms. Let me explain. So if, let's say generally, you can do a conventional loan with 3% down if you meet certain requirements, but by utilizing some of the down payment assistance, you can increase that to a 5% down payment. By doing that, you may get potentially a better interest rate, maybe lower mortgage insurance cost or something like that. To combine a standard FHA loan with a minimum 3.5% down payment with a city or county program that offers assistance in the form of a second or even a grant program or forgivable second mortgage that then allows you to cover that full down payment and closing costs without negatively impacting the cost of the first mortgage in terms of rate or closing costs. I know that might be a little bit confusing, but that is one of the benefits of utilizing one of the city and county programs. Another con is that there are geographical restrictions. I've talked a lot about the fact that there are city programs and county programs and statewide programs, and that can be a little confusing and overwhelming in and of itself. So if a city program exists, you can't use the county program generally. And if a county program exists, you generally can't use the statewide program. The exception to that is CHFA. CHFA does lend throughout the entire state of Colorado, even if a city or county program exists in the area that you're purchasing in. However, if, for example, CHAC, Colorado Housing Assistance Corporation, will not utilize their statewide program if a city or county program exists. Here's another pro: lower mortgage insurance. See, with conventional financing, mortgage insurance is going to be based off of a combination of your credit score and your down payment. So the more money you can put down, let's say you have your own 3% or even 5% to put down, but you combine that with down payment assistance to get even higher, you may be able to reduce the cost of your mortgage insurance. So that's one way down payment assistance can help to lower your mortgage insurance. If you utilize one of CHFA's programs called the CHFA Preferred Program, you are doing a 3% down conventional loan. So not only is it lower down payment, but then you can combine that with down payment assistance to help cover that gap. And you can get a even lower mortgage insurance rate than you typically would with a standard 3% down conventional loan. One of the cons associated with down payment assistance is that sometimes it can take longer to close and maybe have more documentation requirements. Because of the additional restrictions that these programs have, such as income limitations or asset limitations or first-time homebuyer requirements, there may be some additional documentation that's going to be required by you in order to show that you qualify for these particular programs. Those additional documentation requirements in and of themselves is more work, but also may require more time for you to gather together and submit and for the lender to review. In some cases, these programs have an additional compliance review process that has to be submitted into the city, county, or statewide program for them to review prior to issuing the approval. And sometimes that can take a little bit more time as well. Now, most of the time, I would estimate that it's probably no more than a week, if that. All in all, I would say that the pros outweigh the cons when it comes to utilizing down payment assistance. And here's the thing: even if you do end up with a down payment assistance program that has a higher interest rate either on the first mortgage or the second mortgage, a refinance is always going to be possible. None of these down payment assistance programs have any sort of prepayment penalties. There may be a penalty in terms of a forgivable second where you don't get the full second mortgage forgiven. However, none of them will have a prepayment penalty. So with that in mind, if you were to look at a refinance down the road, assuming that rates are in a position where you would benefit, and you do a full analysis of whether or not the refinance will actually benefit you, because there's a lot that goes into that. You'll be resetting your term into a new 30-year loan. They're going to have closing costs on that refinance, and you're going to need to make sure that those things are going to be outweighed by the benefit of the lower interest rate or lower mortgage insurance you'll be able to obtain through a refinance transaction. You'll also be able to buy sooner rather than having to save, which again will allow you to get into a fixed rate mortgage, start building equity, and therefore building your net worth as well. Not to mention that rates might go up and prices are likely going up as well, so being able to buy sooner is going to allow you to keep the affordability of your home in better shape than you would be if you were to try to save and buy down the road. So there's your pros and your cons of down payment assistance. Did I answer the question you came looking for? If not, leave your question in the comments below and I'll be sure to reply. And if you found the info helpful, I'd love a click on that like button. If you're serious about making your first home purchase, then I've got a ton of great info for you to help make that possible. Check out these other videos as you work towards buying a home. Or you can call or text me and I can help you directly.